Welcome to This Explainer. Today, we're tackling a topic that can honestly feel pretty daunting at first glance, but I promise you it really doesn't have to be. We're talking about the stock market. Looking ahead to 2026, we're going to walk through exactly what you need to know to kick off your financial journey with total confidence. Now, what if I told you that you could actually become a part owner of America's biggest companies with just $100? No way, right? It kind of challenges all those traditional ideas we have about wealth and who actually gets to participate in the big economy. But today, we're going to break down exactly how this is entirely possible for you. Okay, let's dive into this. Here is our roadmap for today. Number 1, what is the stock market? 2, how do people make money? 3, where should you invest? 4, market risks and safe options. And finally, number 5, the path to long-term wealth. Let's kick things off with part 1, what is the stock market? Understanding the basics. To really grasp this, I want you to imagine a scenario. Let's say a friend of yours starts a hugely popular burger business and they want to expand. Well, instead of going out and getting a massive bank loan with heavy interest, they decide to sell tiny pieces of their company to people like us. Those pieces are called shares. By providing that capital, buyers actually become fractional owners of the company, and this brilliantly illustrates the whole concept. So when you zoom out from that little burger stand, you get the broader definition. The stock market is simply the specific place where people buy and sell these small parts or shares of various companies. When you buy a share, you are literally becoming a fractional owner of a real operating business, just on a much larger scale. All right, moving right along to part 2. How do people make money? Profits and dividends. So how do you actually turn this investment into cold hard profit? Well, the math is actually super straightforward. Say you buy a share for exactly $100. If that company performs incredibly well over the next few years, your share naturally becomes more valuable. So if its value rises to $180 and you decide to sell it, you walk away with an $80 profit. Simple as that. Now, what's really interesting about this is that selling your shares isn't the only way to earn. Enter the dividend. A dividend is a portion of a company's profits that is given directly back to its investors as cash. You don't even have to sell a single share to get this money. In fact, historically speaking, dividends have accounted for a massive portion of total stock market returns. It's an absolutely incredible perk of ownership. Which brings us to part 3. Where should you invest? Choosing your companies. Pivoting away from our local burger joint for a second, let's look at the massive, real-world scale of the market. Apple, Microsoft, Amazon, Nvidia, Coca-Cola. We're talking about some of the most powerful mega companies on the planet here. And the phenomenal reality is that you do not need millions of dollars or some special insider connections to own a piece of them. Literally anyone can participate. Now let's ground ourselves for part 4, market risks and safe options, navigating the ups and downs. Look, it's completely natural to be afraid of losing your hard-earned money. The market is not a magical money printer. Every single day, share prices fluctuate. You absolutely will experience temporary value drops due to bad company performance or just broader economic problems. But the expert solution to surviving those scary drops is patience. You invest for the long term and you never, ever panic sell to lock in your losses. And hey, if picking individual companies feels way too risky or difficult, there is an ultimate safe and easy tool for beginners, the S&P 500 Index Fund, or ETF. This is a single, super popular investment option that automatically spreads your money across roughly 500 of the largest American companies simultaneously. It massively diversifies your risk. If one company happens to have a terrible year, you've got 499 others backing you up and balancing the scales. And that leads us perfectly into part 5, the path to long-term wealth, building your future. So the crucial point is this. We really need to kill a common misconception right here, right now. The myth that the stock market is just gambling. It's not some game of luck where you blindly roll the dice. The reality is starkly different. It is a highly powerful wealth-building tool that requires foundational knowledge, immense patience, and steadfast long-term thinking. All of which leaves me with one final, provocative question for you. Are you ready to take just $100 and start building your very first investment from absolute zero? If you are, then be sure to join me for our next explainer, where we're going to take all this foundational knowledge and put it into actual real-world practice. Your journey to corporate ownership doesn't end here. It starts right now.